Hello traders, this is Dave with the Compass Options Live Trading Room, and this is going to be the weekly Periscope video for 2/4. I'm going to cover it weekly, but I'm mostly just going to cover the January 2023 review. We'll do a review of the month of January, and I just kind of go over the trades and take a look at the SPY charts and just kind of do a recap. So let's move ahead here. We'll do the disclaimer. All signals and trading opportunities provided, both orally written or electronically, are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose, and neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, let's just gonna recap some of the trades we took here, then I'm gonna go through the entire list in a little different format. But we had a good month of in January. These are all the trades, well, not all of them, but these are most of the trades. We had a couple of losers here with this again, PH, 56% loss. Again, PH, we won, we lost, and we had several trades in that. But overall, this was a good month. We had a nice 55% here on this STZ debit spread. We had an Amazon lottery one afternoon on a Friday for a 40% gain. And all in all, pretty nice run here. ENPH here at 22%, ENPH at 17%, and then ENPH nailed us here on a loss. But all in all, pretty good record here. That's up to the 18th. There's some additional trades, and Costco, nice trade here. Rivian, we got caught in the automobile bump up one day. We had short in Rivian, and it took off. And we also got this AXP was a time spread that we took loss. So we didn't have a great month on time spreads. The time spreads are just getting started. We had 2 and 2, so nothing great there. Carvana, we had a nice 41% here, nice gain on there. TGTX, I think you probably remember that was a very nice trade. We took this overnight and made some good money on that. Same thing with Moderna. And this Para was a beautiful trade here. This was off of unusual option activity that we called out in the room. 49%, almost a 50% gain on that one. That was a beauty. And anyway, from 1/3 to 1/31, we had 42 wins and 5 losses, 47 trades. We actually have a couple of break evens on there, so about 50 trades, but 42 wins, 5 losses, 89% win rate. So a little down from the 92, but still 89% is really, really good. And we like to keep it around there. That was a good month of January. What I'm going to do here, I'm going to drop the slides down. I tried to copy my spreadsheet over here, but it didn't really work very well. So what I'm going to do is I'm going to try to bring up the actual spreadsheet. Here is the actual spreadsheet right here. And let me change this to 150% so we can see it a little more clearly. Oops, where'd it go? Let's drop these slides. Okay, here we go. So this is the actual spreadsheet that I use. These will see the Compass Live trades. This was from 1/3, and I put these in each day, and then I put them into my my trading platform, my trading analyzer, which is called TraderView, and these correspond to that. And the information in there is the same thing, but I think it's much easier to see here. And so these are all the trades that we took each day. This is the ENPH trade. So basically with the position we took, and if you look at this video again after it's done, you can go back and look at it, and you'll see you can go through each one of these trades. But this is in sequence how we took these trades. So 9% here in ENPH, 23% in Tesla here, and this shows you what we paid and what we get out at, and how much we made. And what I've done over here in this column, this is basically if you invested $2,000 in each trade, this is what your profit or loss would be on that particular trade. So we'll carry this through. It also shows you which one we took overnight. If we have a PDS as a put debit spread, CDS as a call debit spread, and TS would be a time spread. So that you can kind of see which stocks, which ones we carried overnight, which ones we did intraday. Anything that doesn't say carried overnight is an intraday trade. We get in and out the same day. So here's ANET for 16%. This KHC, I think you probably remember that. We had to wait on that one, but we finally made 22% on it. And that was overnight UNH, the same thing. 14.20, we had a nice pop the next morning for 17.20 for a $3 gain, which was 21%. And SI was, again, these are intraday trades. Here's the STZ debit spread we were talking about here. Get in for 97 and out for $1.50. That was really, really good one. Again, it was a put debit spread, 54, almost 55% gain on that one. And so you can read these, you will get each one of these. ENPH, again, 21% win here. Merck, a little 16%. His Verizon, this was a break even. We carried it overnight and broke even on it. Boeing, we took a loss on this one, got in at 12.80, out at 8.30. That was a 35% loss on that. So that shows you an $830 loss if you put in 2,000. And I try to be conservative about with these. So I don't, if you could get, on some of these wins, if you could get, 5.6 options to get 2,000, I just use 5. So if you took 6, you would have made more money on it. There's Baxter here. This was a good one, in for 3.30, out for 4, carried overnight, 21% win. And here's that ENPH loss right here. This was, again, we carried it overnight. See the loss over here, $808. And in for 14.43, out for 6.35. Pretty big loss, 55% loss. DG was a good one. So we just go through these quick. And again, you can look at the video, and this will be in here. So you'll be able to look at these trades on here. DG, 15%, nice one here. And this was a lotto here that we had 40% on Amazon. So that you can see the format of it, and it's, carried overnight. If it doesn't say carried overnight, it was an intraday trade. This was a lotto trade. This was a time spread. And this is the profits or loss on those trades for roughly $2,000 invested in each trade. So we just keep on going down things, all of these, so you can see them all listed here. Caterpillar in at 9, out at 10. If you see a little number over here, that's because I carried it overnight. So I put the price that we paid for it over here, and then it just carries over here for the next day. As you can see, in at 9, out at 10, 11% gain. TSM in at 3.40, out for 40. That was actually $4. Made 60 cents on that. The 17.65, that's a typo right there. Yeah, Amazon in for 25. That was a lotto, out for 35 cents. Doesn't seem like much, but it's 40%. And so again, you can look at each one of these. I won't go through every single one, but a lot of trades in here. Again, the total I think was 42 and 5. So really nice month. His was the Rivian loss right here we had to take. That was a bad one. You can see that's a 13.26 loss on that. So we just keep coming down here. 20%, 20%, 21%, 48% on para. This was an unusual option activity. That's what that means right there. Call that out in the room for unusual option activities. 48% gain on that one. That was in for 74, out for $1.10. Really nice. One of the SPY trades we took, this was off the SPY Super Trade system. So again, we just carry these down. Here's a little loss on AT&T. That was a time spread, as you can see. Again, $570 loss on that one. So we just carry them down. So again, you can look at these after the videos, or when you have the video and you want to look at it, you can go back through it, and this will be showing up on the video. And you can see the wins here. Is Moderna for 25% almost. Carvana in for 32, out for 45. That was a call debit spread, 40% gain. Some of these debit spreads work pretty well. Again, if you can buy an awful lot of contracts for $32 a contract here. Spotify, we broke even on this one here. This was a time spread, in for 45, out for 45. And there's AMD right here, the last trade of the month. Some of the other ones closed out before, on the last day, but they're further back up the list here because we entered them earlier. But here's 56, in for 56, out for 70 on this time spread on AMD. That was a 25% gain. So this was what the profits would have been overall for the month on the trades in the room. $9,829, roughly $10,000 for 2,000 invested in each one of these trades. And I didn't figure out what the drawdown would be, but I don't think there would have been much. If I look back here and see that it looks like we had plenty of wins to offset any of these drawdowns. So it looks like we were green for the whole at every point in time during this month. There was no point in time when we actually were underwater for the month. So that's the recap for January, and we just drop this down here and bring the this back up again. Again, it's just, I tried to embed this in here, but I think it's just a lot easier to see on the actual one. So we're going to want to talk a little bit here about the SPY. This is a SPY daily chart. This is the wedge we've been talking about. You can see the wedge here, and we broke out of this wedge and pulled right back to it again and broke out of it, and we just kind of meandering around above it right here. So I mean, it's a pretty good breakout. If we come back down into the wedge again, then we can expect the bear market to continue. Right now, we're looking to see if the market maintains a higher low, which is what this would be right here, and we need to get a higher high. You see this high that's right here across here. We're getting above that. So if we move back up again and produce a higher high, then we likely would have broken the bear market, but it's way too early to call that yet. So we'll see how that plays out. So we're just going to go over some. Let me make the slideshow. Let me go back to this again. So I've got, when I drop this down, it doesn't look so good. So all right, so here we go. So there's the SPY chart again. It looks a little clearer here now because we've got a full screen on that. You see that wedge, and you see we broke out of the wedge here, fell back below it, and now we move back up again through it. So we'll see where we go from here. That's one of the main things I'm watching right now on the SPY. So we just kind of cover, for anybody who's new, this is a trade on Tesla, just to show you what we look for. This obviously is the compass system indicators down here. The ones that we mainly look at is this one here, which is the multi-time frame momentum. This is the current time frame momentum, and this is a 5-minute chart. So this is the 5-minute momentum. This is the multi-time frame, 5, 15, and 45. And again, it's momentum based on a modified Laguerre oscillator, which is looking at just momentum, does not look at divergence. And this is a Tesla trade that we took. These candlesticks here are Heikin-Achi candles, just so we can see what Heikin-Achi candles look like. And Heikin-Achi is typically it's 2 candles put together. They average them out, and they're much easier to actually look at a trend with Heikin-Achi candles. You can see that you went from a candlestick here with a wick and a tail to a flat bottom. That's a bullish Heikin-Achi reversal. As soon as you go to flat bottom, so you notice that every one of these candlesticks all the way up had a flat bottom until you get here. So that is a bullish trend using Heikin-Achi candles, and the acceleration dots here, these green dots inside of this chart, tells us that the momentum down here, current time frame momentum, was pegged at 100. You can't go any higher than that. So we know that we've got the maximum amount of institutional buying that we can measure is being indicated right here. So that's how we look at that. This was a short we had in the SPY, and this is a little different format. Just to show you, this is what's called the Bollinger Band width. And Bollinger Band width is when a stock breaks out of compression, the bandwidth gets wider. The Bollinger Band, obviously, you get one band going up, one band going down, and the bandwidth gets wider. So when this stock broke here, this is a SPY. When we went from a wick to a flat top, see a wick to a flat top, that's a Heikin-Achi bearish reversal. So this is where you would enter in that trade, and you notice that the bandwidth is getting wider. So you're coming out of a compression. So you just ride this thing down until you started to get these candles right here where the stock is compressing. You can see the flat tops all the way down, and then the candles start getting smaller and they have wicks and tails. Time to get out. The bandwidth is starting to compress again, so you get out of the trade. And this by the way is the current time frame Laguerre, the momentum, and you can see that it went from green to yellow, which is bearish, and then to red, which is very bearish. And then after we get out of the trade, it went back to blue again, which is somewhat bullish. All right, it's just so that we can see the different formats here. This is a trade on the SPY, and I keep these up each week so we can look at them. It just kind of shows you what we're looking for on the compass system. You can see here on this blue arrow, this is what's called a pop out of the box signal. And this pink line here is the VWAP, the volume weighted average price. And we want to be trading below the volume weighted average price if we're going short. So as this candle breaks below the VWAP, the volume weighted average price, you get a pop out of the box signal right here, which tells you that we're breaking out of compression. You can see the compression right here. You can see down here that we've got all yellow or red on this candle right here. So that means everything is bearish. We've got institutional selling. Institutional selling, when the compass system tells us that, you would get in right here and follow it down. Again, you can see that everything stays red or yellow. But when it starts to flatten out like this, this is where you would take profits. The candles get much smaller. There's really not much except compression going on. No reason to stay in the trade once you've got your profit right here. So you would get out, and you can see that the current time frame would gear by the momentum switch to blue right here, telling you that there was some buying coming in, but we'd be long gone from that trade by then. All right, this was a trade we did in QSR. Now this is a daily chart. I just want to show the daily chart, and you can see right here on this breakout that we went from yellow to blue, which is bullish, to green, which is very bullish, and you can see the stock breaking out. So this is a good example of how we use the daily chart to take our intraday trades. We want to make sure when we go long, for example, that the daily chart is set up bullishly. We don't want to be taking an intraday trade long if the daily chart is set up bearish, because we don't have as much flexibility to stay in the trade. So this is QSR, and you can see it's a nice breakout. You go to the next chart. This is QSR on the 5-minute for the exact same for that day. In other words, this day right here that we get into the trade, this is the 5-minute candle. All right, so here's the stock coming across. You see it compressing. You see the current time frame Laguerre, or the momentum, is switching colors: yellow, red, blue, back to yellow. But then it goes to green right here, and it goes to green as the stock breaks above the 15 EMA. You see, this is the little green line is a 15 EMA, another good support level. It's breaking out of support right here, and you can take it right here, and again, just follow it up. You see how nicely it just goes up very smoothly. You take your profits here as you start to get tiny little candles. Candles get smaller, momentum is starting to wane, so you get out of the trade right there. And you notice it went to yellow right here, so that would drive you out of the trade anyway, but this is where you would get out. And it's pretty easy to see. And again, the compass system is telling you here that the institutions are in here buying this stock. And this, by the way, is QSR this is on the Dominator system, which the Dominator system it looks at what's called market internals. It's looking at the number of stocks moving up on up volume and upticks versus the number of stocks moving down on down volume and down ticks, and across 5 different indexes: the Dow, the New York Stock Exchange, the Qs, the Russell 2000, and one other one. Yeah, the 5 indexes right here. So this is telling you if they're bullish or bearish, and you notice that we start to get a buy signal right here when everything is green enough to tell us that the number of stocks moving up versus the number of stocks moving down is significantly different. So we get a lot more stocks moving up than moving down right now when you get this. But you could actually join this anywhere along here, because this green background, this dark green background on the Ninja platform, this is the Ninja platform that the Dominator runs on. This dark green background tells you that stock is very bullish. And you notice even when you're getting some red down here, the stock is still moving up. So if you want to try to front run the move up, you could probably take it anywhere in here. If you wanted to take it with a little bit more confidence, you would take it when you get the buy signal here. This was a short on the SPY, and again, this is showing you the Dominator system. So here's market internals on all of the indexes. We're just looking at the SPY. The SPY has a pink background saying that the multi-time frame trend on the SPY is bearish. So you notice the sell signal right here. The one is the first sell signal we get. So you can jump in right here, you write it down, and then the sell signals go away right here. So you take your profits after about 4 candles. That's how you would trade that. I would have been out pretty quick. In trading the SPY, you have to be fairly quick on these things. All right, so this was an ENPH. This is a nice ENPH trade we had. It's one of the ones that we showed up in January. This is the daily chart on EMPH right here. And we took this overnight. And I have to go back and check exactly when, but I think as it broke down here, we took it out of this break, out of this the dynamic compression, and we took it overnight and get out. I'm not sure which candle we get out on, but you can see that it's extremely bearish. Tesla, a 5-minute chart here in Tesla. Again, notice the compass system telling you, basically screaming at you that the institutions are selling this thing. You see how it goes from blue to yellow and everything else is red. You break down right here, this is the 15 EMA. And one of the things we talk about all the time is you want to buy at support and sell at resistance. You want to get in as close to a support or resistance level as possible. So the 15 here was offering resistance to this Tesla. So when it falls away from that 15 and with a pop out of the box signal right here, and heads down, that's where you would get short. And you've got confirmation on the compass system that this is going to continue down, even though it's compressing here now. Everything is still red. There's no indication here that the institutions are not still selling it. So you stay in it and you can ride it down. Now, once it starts to flatten down here and you see you go to this blue candle, then you would take your profits. But that's a nice move down from there to there. Now, this was KHC. This is one we talked about. We had to wait a little bit of time on this. We took it right here. You get no move the next day, and then a nice move up on this day on the daily chart. And this is where we took our profits in KHC on that move up right there. But it's coming out of this dynamic compression zone, which is this shaded area. The compass system shows us a dynamic compression zone. Stock is moving sideways. It breaks out of it. Everything goes to all green, and it pops up and moves. So that's what we're looking for, and that was the daily on KHC. This was STZ. Remember, we had the STZ. We did a put debit spread. This was the day we took the put debit spread right here on this big red candle. You notice that the candle is red. The compass system is all red. It's breaking down below the 15. It's breaking down out of a dynamic compression zone. UNH, another nice one that we had. Another breakdown here. Everything went yellow or red right here. It's breaking down right here at this pop out of the box signal after a compression. This is where you get in and take it overnight, which is what we did. DG, same thing. This is a 5-minute trade in DG. Now, if you notice here, we have blue here, so we're not touching it right here, but it goes to yellow right here, and we get a pop out of the box signal right here as the price comes below the VWAP and starts to head down. This is a perfect entry for the Dollar General right here. As the stock moves down, and you can see that it's coming off the VWAP, it's below the 15, 15 comes right through here. You get a pop out of the box signal, everything's red or yellow, you just jump on board and ride this thing down. And I don't know what we get out, but there'd be no reason to even get out at this point right here, because it's still very, very bearish. All right, so those are some of the charts just to kind of show you what we look for on the compass system and the Dominator system, and we can use them in combination to find these trades. But again, the Dominator is the highest probability trade setups we look for, and we look for these every day. We want to have the Dominator signals in background color align if we can. The Dominator doesn't always show us any kind of market direction. Sometimes it's going to just be choppy, and you're not going to get any kind of signals on the Dominator system. But if you do have a Dominator signal and you're looking at a stock, you want the background color to align with the signal. So if you're getting a green buy signal on the Dominator system, then you want the background color of the stock you're looking at to also be green. You obviously want a bullish multi-time frame trend with the market internals. We're looking to buy at a breakout of dynamic compression, for example. But what this really means here is we want to buy at support, sell at resistance. So dynamic compression zone is one of the places we buy. We can also buy as a bounce off the VWAP. We can also buy on a bounce off the 15 EMA. The critical thing is to get in somewhere close to support or resistance, so your downside risk becomes much smaller if you want to just take a quick intraday trade. If it breaks out of dynamic compression and you get into the trade and it immediately falls back below dynamic compression, you can just get out and take your loss. Or if the daily card is still set up strongly, then you can stay in it and try to ride it overnight. We look for Heikenaichi reversal candles that I mentioned. One of the things that gives us confirmation that the move right back into the same trend is actually occurring. So it's basically a confirmation. We're looking for breakouts in the same direction as the stock. So obviously, if a stock is green for the day, we're only going to trade it long. Red for the day, we're only going to trade it short. We don't want to do any counter trend trading. And also we played breakouts in the same direction as the current market trend, if there is one. So if the market is bullish on the day, we have green market internals, we want to be trading long. It gives us the highest probability. There are cases where you may want to take a short if it's really outstanding and the market's moving up and the short looks really, really weak, but you're still going to have a much higher probability trade if you're trading in the direction of the market, because 75% of the stocks move with the market. So you're gonna have a much higher likelihood of making money on it. Now, obviously, we want the modified LIQUIDITY for the current time frame to match your direction. So green or blue for bullish on the current time frame on the LIQUIDITY momentum, basically. And we also want the multi-time frame or the multi-time frame momentum or LIQUIDITY oscillator. We want that to also be green or blue. So, it's what we looked at on the chart. You want all green and blue for bullish and all red or yellow for bearish. And you'd like to see Bollinger Bands expanding. And if you're getting a breakout of a dynamic compression zone, your Bollinger Bands are going to be expanding. They almost always expand outside of any kind of compression break. And then we want to select stocks that have relative strength and weakness to the SPY. This is really important because if you've got 4 or 5 good stocks that you like, you want to take the one, for example, that's outperforming the SPY by the most. Because if you've got the SPY up 1% and you've got another stock that's up 1.1%, another stock that's up 1.5%, another stock that's up 2.5%, then the stocks they're outperforming the SPY, moving stronger than the SPY, and you look at it on 5-minute candlesticks, then those stocks are going to give you a much bigger cushion if the SPY reverses, because they're more likely to continue to at least go up or at least go sideways. So you'll minimize any losses if the market returns against you. And again, if it's going to be a swing trade, the daily chart must match the trade direction as well. This actually is true for every trade I take these days, pretty much. When I take a trade, the first thing I do is look at the daily chart and make sure the daily chart is aligned with the direction that stock's going today. So if I'm taking a long trade, I want the daily chart to be bullish, and I don't want any nearby resistance levels that it's going to run into. They pop out of the box signal adds conviction to the trade. And the key thing here is have patience. Waiting for compression breaks or waiting to buy at support and sell at resistance is going to help you an awful lot as far as your profitability is concerned. And again, this is the Compass Dominator combo we talked about. The Dominator for bullish, you want the Dominator background green with the Dominator buy signal. And opposite, obviously, for bearish, you want the Dominator background red with a sell signal. And if you've got that in the Dominator and you're looking at a Dominator background green with a buy signal, then you want your compass system to be green on the stock you're taking as well. You want both the current time frame and multi-time frame gears to be green. So you want everything to match up on the compass on the Dominator system. When they do that, it's possible to take larger trade size, especially if you've got a market that's trending. The chart gets choppy, you don't really want to be taking large size. And it's also possible to stay in the trades longer because obviously in a trending market, you've got a much better chance of the stock continuing up or down as opposed to a choppy market. And these are the best entries, which we just talked about, which is basically support and resistance. All of these are support and resistance levels. And I just kind of wanted, this I put on the annual review, but what we're trying to do in the trading room, what the goals we've got in our Compass Options trading room, the goals is to help the members become consistently profitable under all market conditions. And this is really important. 2022 was a brutal year for trading for most people. I know so many traders I know that were making their living trading gave up this past year. So learning to be profitable under all market conditions is really, really critical. So you got to be able to trade in choppy markets. You got to be able to trade in trending markets, both bullish and bearish, and you've got to know when not to trade. There are times during the day and sometimes all day where there is you have no edge. If you don't have an edge, you don't really want to be taking any trade. So that's where patience comes in. I want to teach the members the most effective use of the Compass and Dominator systems. And in my training videos, that you have information on videos on both of those things. finding the most effective high probability trades using the compass, and also finding the highest probability trades using compass and Dominator. And also want to educate members on identifying trading the highest probability trade setups while being patient. This is really important. And we want to accomplish these goals in a relatively low stress and disciplined environment. The room is meant to be for any level of trader, brand new traders to experienced traders. And what we're trying to do is trade in as low stress possible as you can. I mean, there's always going to be stress when you're trading your money, but we want to have discipline. We want to have low stress. We want you to be able to stay in the trades, follow the technicals, and not be pushed in or out based on emotions. So we don't first thing in the morning, we're not chasing stocks up and chasing stocks down on big gaps, because that's very, very, very likely to reverse on you and you're going to get trapped. We're trying not to do that. So again, we want to accomplish these goals in a relatively low stress and disciplined environment. So we don't do hyper scalping. We don't do scalping per se. Most of our trades are going to last a little bit of time. Some of the SPY trades can be fairly quick, but they're generally going to be at least 15 or 20 minutes for half an hour. We're not in and out in a minute or two, but I don't do that. I think it's way too stressful to trade like that. There's plenty of rooms that trade hyper scalping and scalping. If that's what you like to do, then that's where you want to be. But we don't do that in this room. I'm not going to do that in this room. It's very bad for new traders to try to trade like that. To be a scalper or hyper scalper takes a lot of experience. It's one of the most difficult types of trading you can do. Again, we'll talk a little bit about the 2022 trading environment. It was a year-long bear market. Again, the worst since 2008 financial crisis, and most difficult trading environment in many, many years. And again, many retail traders were not able to adjust their trading strategies and mindset, blew up their accounts or simply gave up. And I know many, many examples. And swing trading was particularly difficult because of the many gaps at the open and violent bear market rallies. Very difficult to hold things overnight because they can turn right against you. And again, if you survive the 2022 trading environment, you are well positioned to be a consistently profitable trader, because the market will become a trending market again, hopefully a bullish trending market at some point. And the conditions are going to be much, much easier to trade. And if you've developed good disciplines in this market, it's going to serve you very well in the future as a trader. And this was a recap. We went over this before. This was a recap of 2022. All live room trades. We had 298 wins, 86%, 45 losses, 13%, 4 scratches, profit factor of 2.16, which is very good. The live room using the compass only, and this is from October 3rd to the 12/31. And the reason I broke this out is because on October 3rd is when the Dominator system came into being. So I wanted to look at the trades we took with the compass by itself and with the compass and Dominator combined. So the live room trades using the compass only, October 3rd to 12/31. In other words, we didn't have Dominator alignment. In other words, the Dominator wasn't against us, but it was neutral. There was no market internals in our favor. They weren't against us, but they weren't in our favor. So we had 151 trades, 135 wins, 89.4%, 14 losses, 9.3%, 2 scratches, profit factor 3.57. You see that it's improved from what it was overall during the year. And the live compass from using the compass and Dominator in combination from October 3rd to 12/31. So these would only be trades that had both the compass system and the Dominator system lined up at either bullish or bearish. And we only did 123 trades, so you can see the number of trades was fewer. We had 119 wins out of 123, 3 losses, 1 scratch. I mean, this is pretty astounding win rate here, 96.7%. But you got to be more patient, and you only take the trades when the compass system and the Dominator system line up in the same direction. The profit factor was off. This is up in the sky here, 12.41%. That's telling you that your wins were way, way bigger than your losses, especially when you only have 3 losses. And the SPY super system, which is a beta test, I didn't call these out in the room. This is trading the SPY trades, either bullish or bearish, when the what's called the SPY super system SPY super system was basically the Dominator and the compass system lined up, which means the Dominator was green, for example. To go along, the Dominator was green with a buy signal on the SPY. We were looking at the SPY, and the compass system was green on the SPY. So the SPY itself, the SPY, was bullish, with the compass system being bullish for it, of course, and the Dominator system being market internals being on a buy. Those are the trades we took, and it could have been bearish, bullish and bearish. We had 100 trades, 86 wins, 86% win rate, 10 losses, and that's 10% loss rate, 4 scratches, and a profit factor of 14-17. This is really pretty stunning, because our win rate, you see, was a little bit less than what it was with the other trades, but profit factor was higher because our wins on the SPY were much higher than the losses on the SPY. So we caught some nice running trades on the SPY. So that's basically the recap. Again, these are things you can read about: put credit spreads, how to do those. I'm not going to go into those tonight. This is a link right here on using debit spreads for to do profitable day trades. We did some of those. You saw them in the list. This is a post I did in Reddit on Heikin candles, so it explains what they are and how to use them. And this is a link to my Compass video library of all the videos that I have out. So this is the what we wanted to cover tonight. Again, that's the video. I hope everybody has a great weekend, and I hope everybody I'll be seeing you in the room Monday, so we can move ahead and turn February into as good or better than January was. So again, I'll see everybody on Monday morning, and thanks so much for being a member of the room. I very much appreciate it, and I certainly appreciate all of the help that I'm getting from Savvy Trader and Dr. No in the Discord room. If you haven't been in the Discord room, you want to get in there, because it's a great place to ask you questions about specific trades. And I answer questions in the room all day long, but if you're looking for some more detail on them, Savvy Trader will do that, as will Dr. No. So make sure you get into the Discord room, and make sure you're signed up for the alerts, because I send out alerts on a lot of the trades that we do. Not everyone, but a lot of the trades that we do. So again, I appreciate you folks watching the video, and we'll see everybody in the room on Monday morning. Have a great weekend.